We are being joined by Mr. Shiv Sehgal, who is the President and Head of Nuvama Capital Markets. Hi, good afternoon, Mr. Sehgal. Good to be speaking with you right from the conference itself. But first up, help us understand that what kind of a sentiment are you picking from the industry experts out there? Because there are a lot of moving parts in terms of what were the budget announcements that didn't make the investors or traders rather very much happy. But on the flip side, it's the concerns regarding the US tariffs and the emerging market outflow is what we are witnessing. So give us a sense that in the near term, the kind of weakness that we are seeing, do you believe that it will play in for some more time?
Firstly, thanks and a very good afternoon to you and your listeners. I come live from the conference. As you rightly said so, I think at the forefront of the discussions amongst all foreign and domestic investors is, we had a few big events which are behind from an India perspective. We have had the state elections from Maharashtra and Delhi behind us. We have had the budget behind us. And of course, everyone was waiting for Trump to come into power and what volatility he'll bring. And I think that's been at the forefront of the discussions, even at this conference. I do want to highlight to your audience that the average tariff rate that India imposes on US is about 11.5%. And Washington had made a few statements last couple of weeks that within EM markets, India is on the high side of that as well. So I think what is going to happen is that, as we are all aware, Modi is making his way to the US. I think there'll be a lot of trade concessions put on that dialogue with the Washington administration from an India perspective. And my sense and a lot of rhetoric being built in this conference is that while Washington does not want trade wars, they are definitely using their muscle power to bring the trade partners to the negotiating table. And we have already seen that, Trump reversed the tariffs on Mexico, Colombia, and Canada. And what we are seeing is that even Europe has come out and said that they are willing to cut some auto component tariffs from US imports. So I think these are all negotiating tactics. What the market definitely doesn't like is the policy uncertainty around this, and that is what's causing the volatility. And coming to your point on the FPI selling, I think that's also a predominantly a part of EM funds seeing redemptions, and India is seeing an impact on that. And let's not forget that RBI did cut rate from a domestic perspective. Well, that's very important, and they've infused liquidity into the system, and there's a lot of positive sentiment around that from corporate India. But what is hurting us in the short term is that the yield differential that we had, or the benefit that we had from the US perspective, has kind of compressed. So that is showing up in the weak INR, albeit the stronger dollar. And I think if I had to kind of gauge sentiment from corporate India, surprisingly, walking into this conference, there has been a lot of chatter that a lot of companies are seeing green shoots in rural domestic demand picking up. A lot of companies have actually stated that the start of this calendar year and this quarter, volumes are picking up. There does remain a pressure on some margins. But if I had to extrapolate all this, I would assume that next quarter earnings are looking actually a lot more better from a corporate India perspective. So coming to your moot point, yes, the tape is weak. We are seeing domestic sentiment being on a lighter note, and there has been a healthy consolidation that's been going on for the last, I would say, 2 or 3 months. But I think everyone was expecting a bit of a consolidation on the cards given the kind of run-up we had for the last 2 or 3 years in India. I think the underlying tone still remains positive from corporate India, but from an investor sentiment point, I think, yes, there is an underlying tone as well that can this healthy consolidation turn into something more sinister or a more sharper pullback. And that is a bit worrisome given the breadth of the market that we are seeing in the last 2 or 3 weeks is a bit on the lighter side.
Okay, Mr. Sehgal, thanks for that view coming in. This is Snehi also joining in the conversation. Now this budget, we understand, focused on 2 broad themes. One was consumption, of course, and a little bit of we heard on the capex front as well. But now the capex related buzz has cooled down. Lower support has been seen in the budget as well for this. But do you believe the long-term growth story for capex related stocks is still intact going ahead?
Actually, that's a very important aspect that you touched. A lot of corporates that have come to the conference are actually echoing the point that come 15th Feb, now that the two large elections are behind us, the sense that they are getting from Delhi and their government counterparts is that we will see a revival of large order flows coming through in the capex cycle as well from the government. And so we have not, yes, there has been a kind of a slowdown from that perspective since the new government came to power. But what we are hearing is that the next 1 or 2 months we will see in a flux of orders being granted to the private companies, and that is creating a bit of a buzz on the positive sentiment as well.
But other than that, Mr. Sehgal, give us a sense that which is the most talk sector in your conference right now, because like you rightly and like we have been also discussing the capex versus consumption theme. But other than that, which sector is being chatted the most in this particular conference?
So two things that have emerged. One is, of course, as you rightly said, so I think, the budget has been quite positive on the consumption themes. And as I did mention that rural demand has picked up, which is very positive. By and large, there is a sense of, I would say, the question mark remains on how much Modi and Trump can kind of mitigate the tariffs on India. So there is an element that is growing here as well, which are the sectors that could be isolated from any Washington noise on the tariff side of things. And that again flows back into the fact that we are seeing domestic consumption plays being the main theme. But overall, I would say, the sentiment has remained muted because everyone is looking at, their portfolios and is kind of gauging as to what's happening. But overall, I would again urge and tell people that yes, what had happened was there was a multiple re-rating in the PE that we have seen in India over the last 2-3 years, and earnings had to catch up. Now, of course, the last 2 quarters earning multiples, actually the earnings have been a bit on the tepid side and multiples are derating at the moment. And I think from some of the smarter money, there is a healthy consolidation going on. I also want to add some of the foreign FPIs that had been waiting for this pullback are now looking at India from a very serious lens and waiting to pull the plug in terms of inflows as well. So coming back to my point, I think we are in a kind of a narrative right now where expectations are very low and sentiment has been hurt. So even any positive news flow that comes from Modi's trip or a further injection from RBI can actually change the narrative very fast, and we could see an extremely sharp rally as well, given the kind of positioning that's become light both from large caps and small caps as well. But of course, from the foreign perspective, there is a large, I would say, a diaspora that is looking at to seeing an inflow back into the large caps from the foreign FPIs as well.
Okay, Mr. Sehgal, on a lighter note, give us a sense of how the conference is going on, what is it like on the ground, and tell us how the day 1 panned out yesterday, and what are the expectations from this conference now that we are in the 20th year?
So thanks for highlighting that. I think it's been a flagship event for us. Nuvama has always been, at least at the start of the calendar year, the one, most go-to event. We have been quite proud to host this. The turnout yesterday was exceptionally phenomenal. We had more than 1,000 investors throughout the day. And I would repeat that corporate India, most of the corporates coming in were actually, despite the tape being very positive about as to what they're saying. Yes, there was an element that 1 or 2 quarters could be lighter, but the overall trend, I want to repeat that the overall trend and the bullishness in India that we've been talking about through the press, through financial media, has not changed. What everyone is talking about is that yes, it is a bit of a healthy pullback that we are seeing, but it was much warranted. And some of the portfolio managers actually said that they've been waiting for this to kind of add to their positions. And as Warren Buffett said that or if you really like the business management, the corporate governance, and the stock, you will get now and then opportunities to add to that stock. And that's the kind of mooted point that got discussed across the conference yesterday as well. So people are actually looking forward to this pullback in a healthy way, and the buzz was very long-term positive. And we are quite excited to host this event as well. So the overall trend has been positive. Yes, the tape is not reflecting that, but as I said, it won't take much for that to change and the bullish narrative to come back with a force.
All right, Mr. Sehgal, with this, we'll let you go on that. Thank you so much for taking the time out and speaking with us and also giving us a sense that what the chatter point has been in your conference right now.